Alrighty, what's going on, guys? Edward here, back with another video. At this time, I will be making a series, most likely, about how to identify major key levels in the markets. I was asking this question um, on my Telegram group, which, by the way, if you're not following me, you can find the link in the description. That's where I post pretty much important information every single day. I even do send literally free setups in there, free analysis to keep teaching in here. This is not for signals. This is just to maintain the community informed, and keep teaching everybody the right way. Okay, so if you want to follow me, just go ahead and click the link in the description below. All right, on my Telegram. So let's go ahead and start. As I mentioned, I think I'm gonna make this a series, maybe a couple of videos, maybe two or three, depending on you guys. If you actually want to see more, I'll be maybe in the future with making more videos about this. All right, this particular subject. So okay, just to start, how do we identify major key level, and what is that? What is actually a key level? For those who are beginners or just starting to trade, this is actually one of the first thing we need to learn. You know, when we were starting to trade, this is actually one of the first thing we need to know. Where is a major zone? What is a key level? A key level is normally known also as support or resistance, basically. Okay, support and resistance. Now, let me just change this thing for 1 second. Okay, so right here we have a support and a resistance. Okay, it's basically a ceiling and a floor right here. So we use key levels in this case, and we identify key levels when there is a zone that's been touched multiple times. Market could actually be bouncing off from here to here, then back to here, and then we see market is literally just ranging right now. Okay, so at this point we know that this is a very important resistance and this is a very important support. Okay, why? Is because every time price comes here, there's a lot of people interested in one thing. What is this one thing? Buying, right? Every time the price comes back to a key level, in this case the market, the price, the more touches it has, right? The stronger this support is. Of course, there's a lot of uh, liquidity sitting below, but that's for another sort of stuff, for another explanation. But in this case, every time the price comes back to a level that has been touched multiple times, a lot of traders will be looking for two things: either waiting for the break or entering right here and go for a buy, and a support. Same thing on a resistance. If this is a zone that has been touched multiple times, remember, I'm not drawing just a line, something like this, just a line, right? Because it is a zone. It's an entire zone. The market can react anywhere in that zone. It's a range. Okay, so I know that if the price is coming into a zone, right, that this is a potential resistance right here, it's coming back to the zone. The probabilities are that most likely right here, as I mentioned, we have two potential traders or type of traders that are interested in jumping in: sellers, or maybe buyers who are just simply waiting for price to break and then enter maybe at the retest or whatever. Let's say they are aggressive traders, they can enter right away at the break, right? Or they're just waiting for the retest and then entering right there, right? So every time price gets to a key level, you could either be looking for buys or wait for the break to happen. So you could be looking for sales. Okay, that's basically how you can trade major key levels. Okay, very important, the time frame. Okay, if there is, for example, The higher the time frame, the strongest that support is going to be. You know, you cannot compare a key level from H4 or a daily, right? You cannot compare it with a 5 minute, you know, depending, of course, what you're trying to do. But I'll show you some examples once I jump on the chart. But this is basically the theory, okay? A key level is a zone that has, you know, has multiple touches, okay, in the same zone. And every time price is reaching that zone, you either are looking for the buys or waiting for the break to happen. Okay, there's an aggressive way. I see a lot of traders also trade aggressively this thing. As soon as the price is reaching a key level, in this case, this support right there, they'd be looking for the buy right away. They'll most likely be entering almost immediately. They don't even wait for some sort of signal or whatever. No, they use that as that's enough for me. So I'm going to go for a buy, maybe 1 to 2, 1 to 3, whatever I'm going to reach, or this is going to be my actual target, right? They're buying right away. I don't recommend that. That's very, very aggressive. I want at least to see some sort of rejection. And it's so easy to do that because all you need is patience. If you really want to go buy right here, all you simply do is wait. Just wait for some sort of reaction. You want to see a huge candle, a big engulfing candle, for example. It could be a bullish engulfing candle. That's a nice trigger that you can take, and that could be, your potential entry. But all you have to do is simply wait for a reaction. If you don't see a reaction, then you don't enter. Same thing in here. Every time price touches, you know, 2, 3 times a resistance, the zone right there, you know that if it's reaching, its probabilities are saying that, hey, sellers could start jumping in and bringing this thing down, you know. So that's a zone of take profits as well. So whenever you have a lot of volume, for example, the market pushed up from here, you waited for a bullish engulfing. Normally you place the stop loss about below the zone, a few pips below the zone. Let's say you're aiming right here, right? So when the price is actually reaching that zone, you see that it start losing its strength and it start actually dropping. That's because most likely these guys from here, that got into this buy, they are actually closing their positions. So when they're closing their positions and now they have sellers interested into, going in here and making positions and selling. So this is what's going to, at this point, bring the market now down, you know. So you have selling pressure from there and you have buying pressure from here. Okay, it's not just you that is buying, it's thousands, hundreds of thousands of traders. They're actually going into this thing when the price actually reaches that zone. Okay, so let me go ahead and now jump in on the chart just to show you a few examples, right? And this is US 30. It doesn't matter, this pretty much is price action. You can find this everywhere. Um, uh, doesn't matter if it's indices, commodities, currency pairs, cryptocurrency. It's all the same. Price action works pretty much everywhere. All right. So, for example, here we do have a big. This is on a daily time frame. We have a big major key level right here. You see that when the price reached this zone, it had a reaction, right? Then it broke it. All of a sudden, had a very strong selling pressure right here. It broke it. It's sort of a struggle right here to break above and fail and drop again, right? Until finally actually broke it. So this is a very important key level because it's been acting as a support and as a resistance in the past. The same at the top, right? We have a resistance, a struggle right here, struggle right there, struggle right there, struggle again. So you see, it's a very, very strong consolidation. And all you need to do, guys, if you want to jump into, let's say you want to go selling right here, all you have to do is simply patiently wait for a reaction, right? You can go in lower time frames and starting to see some sort of reactions. What are the reactions that I'm looking for? Look, just for example, right? Just look at this strong reaction. What I mean, you see, price got to the zone. All you have to do is sit back, relax, and just wait. You want to see a big candle. Look at the struggle right there. Price is struggling to break below. Why is it struggling to break below? Because this is a major key level. right? It's a major support in the past, and strongly it's on the daily, so it's very, very strong. So market is struggling right there. You know that eventually, at some point, buyers will start getting in control. They would love to start actually buying into this thing. So what's the sign? You wait for the sign. In this case, what is it? Boom, you have a huge, huge momentum candle right there, right? Bullish engulfing right there. So that's maybe your sign to start actually taking action. So what you want to do is maybe at that point, take that position, your stop loss below the zone, that last low right there, and your take profit. You say, okay, well, because I know there's a big range, market has been ranging for a long time, I'm going to try to aim my target just to that zone. All right. And that's it. I, I could hold it for longer, this way, because I know that this is a very nice, important key level, and I had my strong reaction, which is what I was looking for. Don't get me wrong. Not just because you're getting a strong reaction right there, it means that all the time this is going to work. No, this is like any other strategy. This is not going to work all the time. You should know that. Okay. What you're seeing right here. Oh, price is getting now to that major key level, right? Resistance on a daily time frame that we see that it's been touching multiple times. So if I know that the zone is reaching, let's say I already closed my position, it hit already my TP, right? Boom, it got hit. Beautiful. Take my position. Now, the price is right here. Either two things could happen. The price will either bounce or break. That's it. Two things. You're looking for two things. You want to see either a break or a rejection. If you want to get in on that rejection, what you need to look for is what? A reaction. You need to see a reaction. You don't want to get in with any of these candles. This is very small candles. Look at the size of these wicks. These are telling you that there's a lot of indecision. Okay, when you see strong wicks like that, very strong wicks, it's indecision. I like that the indecision is happening at the key level. You know, So I'm just going to either wait for a strong bearish candle and I'll take that one. That could be more than enough. In this case, you all of a sudden you have a strong momentum candle, right? That could be your entry. If you are that aggressive and you want to use that, you have at least two confluences. You have your bearish candle, strong momentum candle, strong big candle. The bigger, the better. Okay, and you are at a key level, so you place a stop loss above. Now you want to aim. Where are you going to be aiming? You can aim all the way again, all the way down here. It's up to you. You want to do it. You want to you think the price actually it's going to come all the way back down. All right, probably. Just make sure all the time the same as in this position in this entry that we have right here. Once you are halfway up, make sure to take partial profits, move stops to break even. It's always the safest thing to do. Price just came back to tap for the second time again, one more time, another touch right there. Depending right here what you did, maybe you were on break even already, maybe you already moved your stops to break even. Price came back up, stop you out on break even, and now let's see what's going to happen. But you see what is going on right here. You see why price is most likely stopping right there, because that's probably another level. You see the struggle right here. We can go perhaps in lower time frames, and we see that this is a very strong support right here. Okay, so this is not a level on the daily. This is more like on an a medium time frame. So we go from the daily, lower time frame key level. Still, you shouldn't ignore this zone. Price could still react from here and buy again, right? But if you remember that coming from the daily, that rejection already happened. So maybe the selling pressure could still continue, and this 1 hour zone could actually be broken. So what can you do in this case? Again, wait. You want to go buying right here. You let the market hit the zone, right? And are you willing to buy? Okay, but you better wait for your bullish engulfing, right? You better wait for your strong reaction. If you actually able to spot that strong reaction, You enter, you place the stop loss a few pips below the zone, right? And your take profit, you can aim all the way to the top, 1 to 2, 1 to 3. Just make sure to be taking partial profits. Let's say you want to aim again all the way to the top because you think the price will push top in there. That's a nice key level, nice support right there. Fine, you know, take your chances. Um, you wait, and it turns out that the market actually decided to break. Okay, two things you can do. If you're aggressive, you either enter as soon as that candle closes, the body of the candle closes below the zone, you can take that position right away. I don't like it too much because where is going to be my stop loss? I rather see a retest. You know, if I see a retest and then a bullish, I'm sorry, a bearish, in this case, a bearish engulfing candle, oh, that's a lot better, right? Because if I see a bearish engulfing candle right there, I see the reaction. I have already the break happening. Now I see the retest and I see the bearish engulfing right there. So, and I have now a, in this case, I have a, I can place my stop loss above that swing high right there. Okay, that's the safest zone because if this thing breaks right away, where is going to be my stop loss? I don't have my swing high. My swing high will most likely have to be right here. You know, if I just simply wait for the price to break like that and I enter that aggressive, oh, my stop loss is going to be looking a lot bigger right there. So it means that I need to go at least for, that 1 to 2, or maybe let's say aiming to that zone right there. But you see, the risk to reward is not that good. So it's always better to wait for the retest. Being aggressive, it's always more risk, guys. Okay, so maybe at the beginning, okay, when you're learning this thing, you go easy. You actually wait for the retest. Once you become a pro in this thing and you happen to manage everything, your psychology and everything is on point, you want to take the chances, you want to go aggressive, be my guest. You can actually do it. But at the beginning, it's always better to have more patience and wait for the retest. That's the conservative way. That's the safest way, I would say. Okay, if you want to get into that. So, if you keep going in lower time frames, you will find other key levels. Okay, you will find definitely other key levels, other support and resistance. For example, let's see right here. You can even stretch it all the way here if you want. But this is a very important zone on the 5 minute time frame. You see, it rejected every time that it was touching it until finally had a big drop right there, right? So when you see that the market is touching the key level, you want to enter with the strong reaction. This day, I think there was some news. Oh yeah, this was some news. I don't recommend you trading news, but it had a very strong reaction to the downside, right? But this was caused by news. I don't like that, so let's go ahead and ignore that completely. I am not a fundamental trader. I don't like news. So let's see. Let's try to look for other key levels. Key levels can also be found in just when it breaks. If you see a break and retest as well, sometimes support and resistance. Like for example, this one right here. You see, this was a nice support. At price broke. It tried to break above and failed. It touched it again, touch it again, touch it again, like 3 times. It was struggling in this zone. We know the more touches it has, it's probably at some point sellers are gonna get in control. Okay, in this case, in this sort of a strategy, that's what you're looking for. You know, so price is actually failing. You enter when you see that reaction. You don't enter with small candles. You want to see a very strong reaction, very big candle. That's your sign. You see, that's why I'm telling you guys. If you definitely pay attention to the tips that I'm giving you, you shouldn't be failing. You're still gonna have losses, but it shouldn't be that big all the time. You place your stop loss above that zone, and you go 1 to 2 because you never know how far this thing is gonna go. You can use maybe an indicator. It will all depend. But you wait for that strong reaction at the key level. That's how you enter. So I hope it makes sense, guys. This is gonna be probably part one. Let me know if you want to continue watching the series. I'll be more than happy to keep posting more videos on key levels. So I'll see you in the next one. Take it easy.